You filed last year's taxes and wrote down, I made about $12,000 on my side hustle. Then a $1,099K shows up for $28,000 or worse. No $1,099 shows up at all because the platform changed reporting. What do you do when platform records, payouts, and bank deposits don't line up? Stay with me. In the next 12 minutes, you'll get a step-by-step audit-proof playbook for rebuilding missing side hustle income so you can confidently explain where every dollar came from. The best trick is not just matching numbers, it's building a clear narrative the IRS can follow. Here's the promise. By the end of this recording, you'll know how to collect the right source files, reconcile platform payouts to bank deposits, use conservative estimation methods when exact records are missing, and package everything into audit-ready work papers to hand to your tax preparer or the IRS. Quick disclaimer before we dive in. This is educational only, not legal or tax advice. Rules vary by situation and change over time. So, consult a qualified tax professional for specific actions. Start by collecting every electronic trace you can find. Think bank and credit card statements, exported CSVs from marketplaces and payment processors like Stripe, PayPal, Venmo, or Cash App, merchant dashboard reports, customer invoices, appointment calendars, and order confirmation emails. If you have physical receipts, scan them. Preserve PDFs and screenshots with timestamps. This matters because the IRS explicitly allows reconstruction when originals are missing, but the reconstruction must be reasonable and documented. Don't skip the small stuff. A handful of customer confirmation emails or a calendar showing 30 appointments in June can be the difference between acceptance and an aggressive indirect method. Most people stop after pulling bank statements. That's not enough. You need the bookends, sales records, and proof of payment. Imagine a deposit of $1,200 hitting the account on June 30. Did that represent one $1,200 sale, 10 $120 sales, or a transfer from another account? Without platform CSVs or order confirmations, you're guessing. Once you have raw files, build a single ledger. Columns for platform sale ID, platform payout ID, bank deposit date and amount, platform fees and refunds, and net retained amount. If your platform payouts aggregate multiple sales into one deposit, include the payouts breakdown exported from the merchant dashboard, or create a reconstructed payout log using timestamps and sale totals. Concrete example. A Stripe payout on May 5 shows a $3,450 net deposit. Export Stripe's payout CSV and you see 3 sales, 1,200, 1,250, and 1,100, with fees totaling 100. Your ledger ties the 3 sale IDs to that $3,450 bank deposit. If you instead only have the bank deposit and 7 email receipts around those dates, use timestamps and transaction memos to allocate amounts. Document every assumption. If you allocate a deposit proportionally because the payout lacked detail, note the method and the math. The IRS expects reasonable, supportable methods, not guesses. Be careful with transfers and reimbursements. If a deposit includes non-taxable inflows, say a $400 reimbursement for supplies or a personal transfer, mark it out clearly. Treat reimbursements as non-income if they're documented and accounted for on invoices. If they're mingled, show your disaggregation logic. You're legally required to report taxable income even if the platform never issued a $1,099. If exact transaction detail is missing, use conservative, supportable techniques. Sample and project, appointment counts times average sale, or prior year ratios adjusted for known changes. Example 1, sample and project. Pull 1 month of fully documented sales, say June, where you have full CSVs and invoices totaling $4,000 across 40 sales. If July and August bank deposits look similar in volume and deposits, project by multiplying average sale amount by observed sales counts, and document the sampling method, sample size, and confidence boundaries. Example 2, calendar extrapolation. If you're service-based, use an appointment calendar. If you average 12 appointments per month at $80 each from available records, and booking logs show similar volumes for the year, extrapolate and show the math. Numbers matter. Pick a conservative multiplier. If your sample's mean sale is $100, but those months were peak, apply a downward adjustment, say 90%, and explain why. The IRS cares that the method is reasonable and reproducible. Never fabricate receipts. If you can't produce source documents for specific transactions, don't invent them. Use sworn statements only as supplemental evidence, not the foundation of your numbers. Now, convert your ledger and estimation notes into work papers. These should include a master summary of gross receipts by year and month, the deposit to sale reconciliations, a folder of primary documents like CSVs, bank statements, and screenshots, a narrative methodology statement, and a list of unresolved items. Start the work paper package with a concise cover memo, one page that states what changed, summarizes total reconstructed income per year, highlights material differences from filed returns, and lists any recommended actions like filing an amended return or requesting penalty abatement for reasonable cause. Give the preparer or auditor an index, label items consistently so they can find files quickly. When documents are digital, name files with a consistent convention, such as year-month-day_source_type, for example, 2023-06-15, stripe payout.csv. Create a reconciliation key column that links each summary line to the exact file and row number in the original CSV or screenshot. Auditors love that. It reduces friction and demonstrates you aren't hiding anything. If you received a mismatch letter from the IRS, don't panic. When handing this to your tax preparer or mailing a response to an IRS notice, keep it concise. Start with the one-page cover memo, attach the master schedule, and then include a walkthrough notebook that an examiner can follow in under 10 minutes. If you're responding to a CP2000 style notice or a mismatch letter, explicitly crosswalk the IRS's figures to your reconstructed numbers. For example, the IRS 1099K shows $28,450 for 2023. Reconstructed gross receipts for 2023 equal $26,300. Reconciliation. $2,150 in refunds and chargebacks documented on platform exports, zero taxes collected and transferred off platform, then include screenshots of the platform, refunds, and bank credits. Show where figures differ and why. Auditors prefer explanations with source documents rather than long essays. If you recommend an amended return because you underreported, say it plainly and show the corrected Schedule C with your work papers attached. Keep all rebuilt records for at least 3 years. Keep 6 years if you had a substantial omission. Don't delete the screenshots or CSVs after you file. If platform records are truly missing, request third-party transcripts from the IRS or your bank. Form 4506T can get you wage and income transcripts or copies of previously filed returns, useful if you need to reconstruct from what you did file. Processing can take time, so request early. If bank exports were purged and the bank can't provide a full history, ask for whatever they can supply and document the request and the bank's response. Keep correspondence with the platform emails where they confirm a reporting change, notices about 1,099 policy changes, or support chats. These are valuable. Affidavits, or sworn statements from customers or vendors, can be supplemental evidence, but use them sparingly. The IRS may accept them as corroboration, but rarely as sole proof. If you include affidavits, clearly state why other records are missing, and anchor the affidavits to other corroborating items such as email confirmations or calendar entries. If your reconstructed figures materially change a prior return, consult a tax professional about filing an amended return and asking for penalty relief under reasonable cause. The IRS has historically allowed abatements where records were lost due to circumstances beyond the taxpayer's control. Quick recap. Gather everything: bank statements, platform CSVs, invoices, emails,